Alright, what's up everybody? So I'm going to make a new video today about answering some questions that one of my friends asked me, but I'm going to actually post it and make the video public because I figure these questions will help a lot of people that are just starting out swing trading or just trading in general. So the topic of today's video is going to be one answering these questions on the side, but they're all surrounding swing trading and the basics of swing trading. And I know I already made a video about this in the past, but that was just me going off of my own kind of script, so to say, and making points that I thought were valuable. But now that I have questions from somebody, it'll be a lot more beneficial, I feel, in this video. And also, I'm going to try and make it a little shorter than the last one because that was a very long video and I don't want to bore you guys. So let's get right into it. First of all, what the first question is: what are examples of a wedge and flag, and how do you see them? So we can actually, since we're swing trading, I'll look off of the key frames that you'll look at to find swing plays, which are the daily, the 4-hour, and the hourly. So just looking off the daily here, this is a perfect example here of a wedge. Um, so like we talked about Brody in the last video, was the way you find wedges is just drawing the trend line that we talked about from highs to highs, and a break over that is a wedge break pretty much, or a downtrend break, but same basis for the most part. So that's one example here, and like I said, we're going to use the daily. I'm going to try and keep all examples on the daily just to keep it easier. So SUNW was a good example of one. PT here, this was one of the swings that I shouted out last week. This is another example of a wedge break, and look what happened once this wedge broke. Nice upside, strong move. So that's another example here. So another example we can look at would be, we can look at HYMC right here. This is a wedge waiting to happen here. It's a little broken, but we can look on the hourly, and this would be a wedge here. You can connect this here. Right here, this would be a wedge. I mean, it's somewhat of a flag, but this breakover would be a wedge break or a downtrend break. And so those are the ones that I'm thinking of off the top of my head. And then we'll go into, this was another good example as well. This is more, it's still technically a flag, I would say, and it broke out today. So see, we drew our trend lines from the highs, and now we're breaking above this. And now we can expect a strong move or a reject back to lower trend line. And now a great perfect example of a bull flag would be here, EJH on the daily. So it's similar, very, very similar to a wedge, but bull flags they come off of a strong move to the upside, they come after that. So here's pretty much what's known as your flag pole, and here's your actual flag. And now we're getting a break above. So those are a few different setups. They're kind of harder to find on the daily. They're easier to find on the hourly and 4-hour, and with the markets right now, it's kind of hard to find picture perfect setups on the daily. Or else I would have some more examples. I may have another one here. I swear I had it. Right here, this would be another example. This is a little messed up, but there's a flag look for the most part, and you'll look for a break to the upside here. So that was just a quick kind of overview. Like I said, it's kind of hard to find daily charts. It's easy to find 5-minute intraday charts, but like I said, with swinging, we want to stick to the frames that you're going to be using. So I don't want to over complicate things. So the one. Next question is, how long should we stay in the market? So depending on who you ask, you're going to get different answers, obviously, and a lot of people think different ways, and they're strong on their opinions, whether they truly believe it to be true or not. Right now, I try not to expose myself for any more than I'd say a day and a half or 2 days. But being over PDT, I'm able to day trade, so my trades are super quick. But if my exposure right now, the most I've exposed myself these last few weeks is probably 2 days at the most, because these overnight plays are starting to work, which is an overnight play is just a mini swing for the most part. So an example of one that I took today would be USWS right here. This would be a wedge break, and now I overnighted here right before close, looking for a move because it's set up for a move uh, at the levels it's at. So I'm expecting a quick move to the upside, and I also save a day trade by adding right before close. And so it all depends on what the play is, what the sector is, whether you're playing it off news, the technical setup, whatever it may be. But I wouldn't leave yourself exposed any longer than 2, maybe 3 days. But like I said, it all depends on the sector and the reason you're playing it. Alrighty, now moving on. What is scaling in an in-depth? Perfect. So scaling in, this can be used on any time frame, but we're going to go for intraday just because it'll make a little more sense, I'm assuming. So let's see. So scaling in is you have your levels already drawn out. So when you have your levels charted out, you're looking at these levels to see, because you're expecting them to reverse off those levels or reject off those levels. And so you want to see what the reaction is off of the levels you charted. And in doing so, you want to scale in around those levels. So for instance, say today, like I said, we're going to use intraday charts because it'll be a lot easier to explain and see. So today on this stock, this was the highest gainer of the day, ATER. So we had the initial run up to high a day, and now we had this strong consolidation period, which consolidation just means it's trading sideways. And so say that we notice this is making a bottom here, multiple bottom, and catching support off 331. So we're watching this 331 level, 331, and then it pops, and then you say, oh, I didn't get in time, but I want in. So after this, it pulls back a little bit. You know that this 330 is holding as strong support, so you want to base your risk off this 330 level. So after this pop here, it could fall back down to 334 like it did, and then now it's trading sideways around 340s. So you would scale in here, you could scale in some here, because you want to be in for the run, and your risk is also pretty low now, and you're only risking this 330 level. So you say you scaled in here, you got a mini pop, and then came back down to this 330 level, which held as support again. So now that you see it's still acting as support, you could scale in some more down here and lower your average and be in bigger size. And so say you scaled in after this pop right here, and then you scaled in again after seeing that this 331 level was still holding as support. Look what would have happened. You would have been in for this move up. And so now, same goes for scaling out. You're looking at overhead levels you have charted. So this would have been a level here, 371. So say you were in here. You would have got this move up, and you would say, okay, we have a double top, or the high of the day is 371, so I'm going to take a little profit and scale some out here. So you can scale 25%, 50%, whatever it may be. But this one was very volatile, so I would be scaling 50% most times. That's usually my scale ins and outs, 50%, then 50%. And so you would scale some out around 371. We know we have a level around 391. And so you'd scale some at 50%, let's say at 371. You come up here, you reject 391, you pull back, and you're going for another run. You know this 390 level rejected, so you need to get a breakthrough there. But in doing so, you know we just pulled back, but you got relief because it pushed back up. So as we near this 390 level, this area of resistance, you could scale out 25% just in case, another 25%, and you're 75% out, just in case we don't break it. And so then we pop above, can't break it, can't break it, can't break it, and now we're coming back here, and then you can base this 371 level. So say you let the last 25% ride, after all these rejections and it breaks below this support, you could scale out the rest and you'd still be in the money. So it all depends on how quick a stock is moving or how much size you have in the play that determines how quick or how slow you're going to scale in or out. And like I said, the most common methods for scaling out is either 50-50, 25, 25-50, 25, or 33%, 33%, 33%. So hopefully that makes sense. Alrighty, the next question is when to use EMAs and what are they? So EMAs is the exponential moving average. It's the moving average over a period of time that you will set, and there is common strategies that you can follow, like the 20 EMA, the 50 EMA, the 9 EMA. The 9 EMA is the most popular for trading intraday. The most common EMAs for swinging, though, that I have came across are the right here. I'll pull them out for you to make it easier. Right here. Let me use the set. I'll take that off. Is the 200, the 20, and the 50, as you can see. And so the reason those are the most used is because those are oftentimes the most respected ones. And the chart usually will respect these certain levels, but it's up to you to find what the relationship is. So some stocks have a relationship where they can't break over the 50, and when they do and hold it as support, it's bullish. And so there's two types of moving averages. There's just simple. The first one is simple moving averages, and then which react slower to the price, and then there is exponential moving averages, which move quicker and are more of a magnet to the price. So for instance, if we look here on this one, this is the highest runner of the day that we just looked at. If we look left, look, this red one here is the 50 EMA. We saw it act as resistance, couldn't break through. Right here, clear reject, couldn't break through. Right here, clear reject, couldn't break through, but then today we had the strength to break through it, and look at the move we got. So all EMAs are is they're used as just another tool of support and resistance. Just like how we chart support and resistance, EMAs and MAs, which is the simple moving averages, are used the exact same way. And people will base their swing strategies off of certain EMA setups. Like if the 20 crosses the 50, they'll play that setup. It's up to you to find your edge and your strategy and to find out what works best for you. But if you look up EMA swing trading strategies, you'll find many that people use and that they've been successful using. So that bottom line, all EMAs and SMAs is basically just another indicator and tool of support and resistance. Going to the next question. I'm going to try and speed this up a little bit because I'm taking a little longer than I had anticipated. The next indicator, or what are some indicators that are useful and how do you use them? So for swinging, EMAs and simple moving averages are very useful swinging tips. And then the two that I use are the MACD, which is the moving average convergence and divergence, and the RSI, which is the relative strength index. So how do you use them? The MACD, which, like I said, the moving average convergence and divergence, it's used to show convergences and divergences of price strength. Sometimes you won't be able to see the strength or the weakness on just looking at the chart, but this will tell you, hey, this is weak, so be careful. And so I really like looking for plays that are converging on the MACD because it shows that there's signs of strength with it and behind the play. Now, the relative strength index it tells you whether a play is oversold or overbought. So the two levels that are on the RSI by default are the 70 level right here, which is the overbought level, and then the 30 level, which is the oversold. So you can use indicators to find what's called relationships, and the relationship of a stock, or the personality, that's the word I'm looking for, of a stock. So we already found one personality using emas, and that is that the 50 EMA is strong resistance, and that when it breaks through the 50 EMA and holds it, it has a lot of strength behind the move. Same thing goes for other indicators, like just looking at the RSI here. We can see that when the RSI touches the oversold level, like here and right here, we see that it gives bounces off of this level. And so we can use that to then build a thesis, or next time set alerts to where next time if it comes down to the oversold level, we can buy it up. Because just how you find support and resistance on a chart, you can find the same thing on indicators. So like here, the 30 level, or the oversold level, is strong support for this individual stock. And same goes for, we can look for resistance here. So we chart the highs and look. We can see that this 48 level tends to react as resistance. Right here it rejected it and came lower. Right here it rejected it. Right here it rejected it. And then we finally broke through, and what do we have? We had strength and a breakout. So you use indicators are a tool to use to see hidden strength or weakness, and also to see a stock's personality, because they show their personality on more things than just the chart. Many indicators will reveal personalities of a single stock and help you build a thesis and an idea of when to buy and when to sell, if that makes sense. So those are the two that I mainly use, but the top indicators for swinging are, like I said, simple moving averages, right here, exponential moving averages, and then the MACD, and the RSI. Those are the main ones that people will use. But again, once you find your strategy and what works best for you, then you can use whatever indicators work best and give you a higher win rate. It's all depending on your strategy and your edge, which everyone's is different. So I hope that made somewhat of sense. Alrighty, and then for the last and final question, it is regarding orders and order types. So walk through on Webull how and when to use different order types, and if not to use certain ones starting out. So this is a really good question, and it does look very complex, but I promise you, once I explain this, it'll limit it down to just 2, maybe 3 orders that you'll use instead of all of them, looking intimidating. So I labeled them all here in the bottom right corner so I can give a definition, and so that you can visually see the definition rather than me explaining it quick and you forgetting. So first we have a limit order. What a limit order is it allows you to buy or sell at a price of your choosing, or better. So let's say that you want to place a limit sell. So actually let's do a limit buy. So say that you want to place, say the stock's at $1.10. Actually, here, I want to make this a lot as easy as possible. So let's take this example. For instance, let's say that we are looking intraday and we want to put in orders here. So we are looking at the movement and seeing what levels are acting as supply and resistance, and you'll notice I'm saying support and resistance a lot, because that's the basis of all things trading. That's where you'll buy, that's where you'll sell, that's where you'll look for ads, etc. So let's say on this particular stock we want to We know this 323 level is a key daily level. So say when this popped up over 3 and hit 335, we want to get in on this because we think there's more upside. So knowing that this 323 level should hold as support, you can put in a buy, a limit buy for, and you don't want to put it on the exact level because sometimes they'll bounce 1 or 2 cents above or below. So this level being 323, you could set your limit buy to 3, let's say 25. So that means when and if the price comes down to your limit price 325, it will fill your order at 325 or better, meaning 325 or 324 or 323, depending on how good of a fill you get. So by placing a limit buy, you're saying, I want to buy this amount of shares at 325 or better. And now on the other side, say you get filled now, and you know that this 353 is a key level, you could place a limit sell for your shares at 350. So now that means that if the price hits 350 or higher, your order will execute to fill and sell 500 shares or however many shares you have, which if you had it at 350, you would see that you would have gotten filled. So all limit orders are is you picking a specific price that you would like to buy or sell at. You have control over what price your order will fill and execute at. Now going on to market, this is a little bit different. A market order is an order where you are filled at the best price your broker can execute at. So you use market orders to get in and out super quick. You're not guaranteed any price. If you press sell at 325, you're not guaranteed to get out at 325. You could get filled at 323, 324, 322, whatever. A few cents on or off depends on how quick or the price is moving. But a market order is an order that executes at the best price your broker can execute it at. So for Webull, for example, there's no commissions and it's a free broker, which means your orders may not be as great as if you were on a paid broker paying commissions. So for instance, say you press, let's see, so let's say you want to buy at 323 again. We'll use the same example. But the pullback is happening super quick, and it pulls back below, but then the price comes back up and it holds 323. If you see 323 is now holding back again as support, and then you look and you see on the time and sales, okay, we have a big buyer buying in, you might just slap the market buy to get in as quick as you can. Or if something gets news, you'll slap the market buy to get in as quick as you can. Same thing on the sell side. If you want to get out quickly because the stock has bad news, or if you see a big seller on the orders and time and sales, you'll want to get out quick, so you can use that. Sorry, I'm going very slow. I need to speed it up. Next is a stop order. So these are used these are the most common orders and orders that I use the most. It is a stop order is saying that if the price hits 105, I want to sell immediately. So right here, as we said earlier, your 331 level was holding a strong support. So we could put in a sell level at 330, because if it breaks below 331, which has been holding a support, the setup is pretty much bearish. So if it breaks below this strong support, it'll instantly sell if it hits 330. And that's a way that you can control your entry, or control your exits and the price you're getting out at because you pick. Next, I gotta go quick. Stop limit. So selling a stop limit, which I don't use just because I like to know what price I'm getting out at. But for instance, A stop limit order would be, say you set a stop price at $4. A stop price of $4, and your stop limit price would be $3.95. So this means once the price hits $4, an order will execute to sell your amount of shares no lower than $3.95. So it's basically just saying it's like a stop order, but instead of selling as soon as it hits a stop price, it executes the order to get you out in this range. That way, if something's falling super quick, you'll get filled most times because you have a range rather than one simple order. And finally, a trailing stop. You use these, well, I don't use them and I don't recommend using them. A trailing stop is, to my understanding, if I have it correctly, is a trailing stop is 5% below the high of day, or the high that the stock makes while you're in it. That way, so people will use that so they have a controlled stop and they don't have to keep messing with them. But I have found that a lot of times you don't get filled on trailing stops, and by using a trailing stop, it's always moving, so you're exposing yourself to more risk. So the ones that I would stick to are limit buys and sells, and then stop limits for sells, and then market orders if you're swapping for news or if you just want to get in instantly. But just know that you might not get filled at the exact price you pressed buy at. So hopefully that made some sense. And sorry, this video was a lot longer than I had anticipated, but either way, I try to cover as much as I can while not boring you. So I hope I answered your questions, and I hope those who are watching that didn't ask the questions, I hope that I was able to help and give you some insight to begin your journey and help out with your swing trading journey, and whether you're just now starting out or you're just looking for more information on swing trading. I also have another video which I can link down below to the first video I made on swinging and swing trading if you're new to the channel. But like I said, I hope this helped, and I hope I was able to answer these questions thoroughly enough. If you have any more questions, feel free to leave them in the comments below or DM me on Twitter or anything like that, and feel free to comment below what topics you want covered in the next video, and I'll get to them as quick as I can. So thank you guys for watching, and yeah, I'll see you guys in the next video.